things up. We can always talk groceries and couponing. I am totally okay with that. So if you have those questions, feel free to ask them. But we're also going to talk credit cards, credit scores, loans, just some finances. This is really kind of it's not a very secret passion. Obviously, I run a website about trying to get you to save money, but everything finances has always been something that I love. All about, ways that we can save money on everything, but taxes, etc. I don't know why. Always enjoyed it. So tonight we're going to try to hit a little bit on the numbers. If you've got questions related to that, that's great. Leave them in the comments. If you have questions that are off topic, that's okay too. Leave those in the comments in between my husband or myself. One of us will make sure that I see them and I will hopefully get you an answer. So we're going to dive in on credit cards first, then credit scores is our goal, and lastly loans. I don't lump credit cards and loans together. To me, it isn't a loan, it isn't a form of debt. I know for some folks it is, and so we can talk about that too, how to try to get out of that debt if that's where you are. But for us, credit cards are more like a means to free vacations and some fun perks. So that's where I would love for us to go in terms of credit cards. But I know that for a lot of folks, especially after this past year, that's not how credit cards are for you right now. They aren't free vacations. They are an added bill with a really high interest rate. So it's kind of why I wanted to hit on this. We actually did it a year ago. So it's, just see where folks are. How did this last year pan out for you? And are you worse off than you were? Then this is a great time to really talk about how to cut back or how to condense some of those expenses so that we can get out of that debt that maybe you've gotten into. And hello to everyone that's joining us we've got folks from Georgia and 2 of you from Jacksonville, Barbara and Bridget. Nice to have all of you guys join us tonight. So to dive in on the credit card side, I've long shared this. I am not, it's kind of like, we could make a list of where Dave Ramsey has possibly gone wrong. And in my opinion, credit cards is actually one of them. Used correctly, credit cards are incredibly helpful for you. They are the easiest way to build your credit report and your credit score, where we're going next. It's incredibly hard to do that without having credit. So a credit card comes in handy there. But when I talk about credit cards and we think of them as free vacations, that is because we entirely pay them off every month. If you are not doing that, then potentially a credit card is a dangerous thing for you to have. But there is still an option for you, and that is basically a prepaid credit card. It's a credit card that has zero risk to the bank because you can't run it up. And it really has zero risk to you because it's your own money that is funding that credit card and getting it started. It does add to your credit report. So if you have had a bad history with credit cards or you're trying to dig yourself out and rebuild your credit, that could be a great place to start. A prepaid credit card. It's basically, like what we think of in the grocery store where they sell that Visa card. Same exact concept, except that you're going through a bank. And you are going to say, you know what, here's $300. I'm going to pay this up front, and they're going to give you a credit card with a $300 balance. And as you spend it, you then pay that back. You always keep a $300 credit behind that credit card so that as you use it, you have to replenish it. If you were to use it all, the credit card is not going to work. However, I can't rack up interest that I have to pay on that, and there are no fees that I'm gonna have to pay on that beyond just setting up the card. It isn't as simple as some credit cards. They will charge you kind of an activation fee, but these again count towards your credit report. Now the ones you buy in the grocery store, they do not. So when I'm saying get a prepaid credit card, it really is going to your bank and asking for a special prepaid credit card so that it does kind of tie to who you are versus the one in CVS. They don't know who you are. So we don't want to go that route. In terms of, credit cards that are out there and paying them off every month, the easiest way to do that, guys, is a magic button in your account that is auto pay full balance. And if you are scared to check that box, then you do need to kind of rethink, how am I using this credit card? Because you shouldn't be using it to cover things that you cannot afford. As long as I'm using it to cover what I know is in my checking account, then checking that little auto pay full balance box, it's not a scary box. You are not going to have a bill that your checking account cannot handle. But if that box scares you, then yeah, we need to step back and we need to ponder how much we are using our cards and whether or not we're using them for things that are needed or a lot of things that are wanted, and that gets to be a problem. So for us and how we use credit cards, that's actually all that we make purchases on. My husband might carry a debit card. I don't know. I don't carry a debit card. And even if I did, I don't even know the PIN on it. So it would be useless for me if I wanted to use it at an ATM or anything like that. So I don't even worry about it. It is not in my wallet. We just use credit cards. And I know that sounds crazy, but we pay them off every month automatically. And our credit cards are used for grocery purchases, gas purchases, anything around town that we purchase, it goes on a credit card. Now, we aren't crazy purchasers either. We're pretty frugal people. If I'm going to take the kids for a treat, I'm going to see if I have Chick-fil-A points to be able to afford that treat before we just pop in. So it really does come down to how you're used to using them and putting points on, or putting money on them. But for us, we do this on purpose so that all of our expenses are on the credit card for two reasons. One, there's a little bit more safety behind a credit card. And I've always said that. Some folks get a little bit more upset about it. If you use a debit card and your debit card is stolen, someone can actually clean out your checking account. Not saying you won't get your money back. I am saying that for a time, you will have nothing in your checking account. That is not a happy place to be. It has happened to a family member of ours. So seeing them go through that, and that was actually their checks got stolen, completely lost everything in their checking account, took a couple months for them to get it back. That's not a happy place to be. You've got bills to pay. If somebody steals your credit card, usually you know that within 24 hours. I don't know about you guys, but we get text messages like, did you try to buy this? And a lot of times it's stopping us from what we're trying to buy. But you will know pretty quickly, and all you have to say is no. You're not held liable for any of that. I think the max liability on a credit card is $50. And even then, most of them do not hold you to that unless you didn't tell them for like 3 months that you didn't purchase something. So it's just a safer place. They're not taking money directly out of our account. That makes us feel a lot better. So that's number one. Number two is all of the perks. So if we're paying for something, everything with a credit card, and I have two, one that I make for business purchases and one that I make for personal. So business is all going onto a Marriott card. We're earning points to stay in Marriott hotels. And business is all going on to a Chase card. And Chase has Chase rewards points of their own that you can redeem in all sorts of manners. We also have an Amazon card that we use pretty much for Amazon. But you get the idea. It depends on where you are, how the points are going to line up. We don't have a lot of other cards other than that. I guess the only other credit card, if we're going to be lay it on the table here, is a Kohl's card. Because if you're going to shop at Kohl's, you should have a Kohl's card. Everyone right now that has a Kohl's card, I know we got a 30% off code in the mail. If you've got things you need to purchase, that's pretty sweet, but you can only get those with the card. That's the only store card that we have. I'm not going to list Target in there because the Target Red card is not a credit card if you choose the debit option. So there you go. You have a full view of what's in our wallet. But seriously, for us, that means at Amazon, I'm getting 5% back on every purchase in points to use for our next Amazon purchase. It means for Marriott, when we make business purchases, we're earning free hotel stays. For Chase, we could redeem those for all sorts of things. But my plan is airline miles whenever, we feel safe to travel again. That's kind of how we handle it, paying those off every month. Now, if you aren't there, let's talk. How do we consolidate some debt? How do we get out of credit card debt? You've had a bad past with credit cards and you're ready to be clean and start afresh. There are a few things you can do. The easiest to start with, well, let me say what I don't want you to do. Hands down, the last little bit of where I wanted to go tonight was loans. It is never recommended that you roll credit card debt into a mortgage or any other loan that is secured by a piece of property that you own. So there's two different things here. Credit card debt is actually considered unsecured debt. That means that if I owe a bunch of money on my credit card and maybe I get to a point where I don't pay it, I'm going to declare bankruptcy. I am not going to actually lose property that I live in or that I own. It is an unsecured debt. It is going to go on my credit report. It's not going to look pretty. It's not something we should do. But if I roll all that credit card debt and I refinance it into my mortgage, I have now taken unsecured debt that is not tied to a piece of property, and I have fully tied that to my house. If something really big happens, you just lost your house, where I didn't before. So hopefully that helps you to see why it's a massive, not good idea. I don't want to say you can't do it, because you definitely can. Every mortgage broker in the world is going to ask you if you would like to, consolidate your debt. It's a magical word. Not that way. There are other ways to do it. It is not going to be that way. Do not roll credit card debt into a refinance. And really any debt, any unsecured debt. So there's a lot of unsecured debt that's out there. Let's say you owe a bunch of money to the hospital. Even if you had a baby, they're not going to come back and take the baby. You owe the money to the hospital. But if I don't pay that, my credit report is dinged. It looks really bad on me, but I am still living in my house. So that's where I want you to realize what secured debt and unsecured debt looks like. Secured debt typically is a house. You went out, you had an appraisal. If you don't pay the bill, they take your house. A car loan. If I don't pay the bill, they take the car. You get the idea. Obviously, you're not going to roll your debt into your car loan. The house is really where most people go there. So just be really, really careful about consolidating debt and using a refinance or a home equity to do that. They will all be glad to help you do it, but it is a really bad decision for you long term. If something horrible happened, you just are in an even worse horrible situation than you were 5 minutes ago, when you realize, wait, not only did we lose our job and we can't pay all these bills, we now don't have a place to live. So don't put yourself in that position. So to get into paying off the credit cards that you do have, there's a few things you can do. One, easily calling the credit card company and trying to see if you can somehow negotiate a lower interest rate with them. Tell them you're having a hard time making those payments. Two, you can reach out to credit consolidation companies that are out there. Sometimes they'll make those phone calls for you. I don't want you to have to pay for these services, so stay away from anyone that tries to charge you to help you consolidate your loans. There are actually free services that do this, so you need to just go hunting. If the first one you find wants to charge you for this, step down, find another one. Don't just go to the first website that pulls up. Option two, depending on your credit, is actually to look and see if you can get a zero interest APR. So it's going to start off with no interest for the first X number of months. Lately, credit cards are kind of hurting, and we've seen a couple offers come through. I've seen ads for offers as I surf the web for like 24 months. That's 2 years of no interest. So you could take the credit debt that you have and roll it into a new credit card. I know this seems crazy. You got yourself in trouble with one. We're not going to use the next one. I want you to lock it in a drawer, but you're going to roll that debt onto the next one that has a 0% APR for 2 years. So imagine now you're going to pay down your debt with no interest, because it's the interest that's killing you and keeping you from being able to pay off that debt. So hopefully, try those two options, see what that'll, or three, I guess, calling your credit card company, going through a credit consolidation company, or looking for 0% transfer offers. If we transfer debt from over here to a new card, we are not going to use it. So if you're in a boat where credit cards are really tempting or you're struggling, to me, if you've reached a point where you cannot make the whole payment, you've hit the point where the credit card does need to get locked away. If you don't trust yourself, put it in a safety deposit box at the bank. A lot of folks don't even realize, but there's a chance that your bank account actually offers you a free safety deposit box and you don't even use that feature of your bank account. This could be a great way. You can actually cut your credit cards up if you would like to go that route too. All it takes is calling them and saying, hey, I need you to send me another card. You could even tell them I cut it up. I didn't want myself to use it. They'll send you a new one. So whatever you need to do to kind of turn off if you've reached a point where you are using them incorrectly. I know for some folks, you can't pay all the bills and the only way to pay the bill is with a credit card. Then you need to find some other resources. There's a lot of help out there, even if it is that we're hitting a food bank and we're looking into other things that we can do to cut all of our expenses. That's where you are. If we cannot hit the point where we can pay that credit card off every month, we're barely using it, we're just using it for what we need, then we got to sit down and we got to look at the big picture, because that is not meant to be a way to get through life. That's not why they're there, and that's not how I want you to be using them. So to get, I know I've seen a couple questions. Fallon is asking, what type of savings account do I recommend when saving 3 to 6 months of expenses? So honestly, I would encourage you to look at getting an Acorns account. And I'll send you guys a link. So if you go through the link that I give you, or that I'm going to put in, you will get a bonus in your account when you first sign up. But an Acorns account, and I mentioned this a few weeks ago, I feel like, or a few months ago, I don't know. But with an Acorns account, it is not a just bank account. It is an online investment account that you can put money into anytime you want, and you can take money from anytime you want. No fees, no penalties there. And with Acorns, you are going to earn like interest, as in stock interest. Your money is invested in the stock market, and so you are going to earn way more than you would have earned in a bank. I mean, banks right now are paying like it almost feels like it's 0.00000001. You're going to earn nothing with your money in a bank account. So what you're looking for is some way to invest safely in the stock market. And I say safely on purpose because right now things are kind of incredibly volatile. It's not super pretty in the stock market. If you're just in single stocks and you're watching it go up one day and then crash the next, I would actually say, based on what I've seen in our investments, that it's almost more volatile in the last 2 months than I feel like we saw for most of last year. Things are just kind of all over the place. But I will show you, this is where we put money. I just put a little bit of money into our Acorns account on a regular basis. But I will show you for ours, and I'll even literally going to log into my Acorns account here. But this is our Acorns account, and over the last year, we've earned 8.12%. So it just shows you as it grows. This jump is just a big deposit that we made, but we've earned 8% on what is in this account. Now, it's not a lot of money. We have $844 in our little account. So now you know all of my dirty secrets, but this is really an account that we're using to make those yearly payments that kind of pop up on you. And we're still earning 8%. And I mean, seriously, the market really has been kind of crazy. And if you've been watching your 401k or your IRAs, it isn't pretty on some days, but that's been pretty solid. So in terms of putting aside your emergency bucket, Acorns is touchable at any point. It does take 3 days to get your money out. No fees to take your money out. Acorns does have a monthly fee. I guess I should emphasize that. It does have a monthly fee as low as like $1. It depends on the version of Acorns that you pick. But that is where I would recommend that you go. There are some other apps that are like Acorns. What I like about it, since you asked, I'm going to just give you the whole review here. What I like about it is that it actually takes all of the guesswork out for you. It's going to ask you how you're okay with risk. Do you want to be like super, super conservative? Are you okay with a little bit of risk? Are you okay with a ton of risk? And based on that, it's going to invest all your money for you. So you're not going to have to think about the stocks. You're not even going to have to be concerned in what you're buying. You will be able to see, it will show you what they've purchased for you. Most of it's mutual funds. But I like, for basic folks, all I want to do is just have a savings account. I don't want to have to spend a ton of time figuring out how to make it earn. Acorns is great for that. So, and I guess one other thing, folks get caught up on the monthly fee. You do need to realize that when you invest in the stock market, there are fees for that. Not necessarily anymore on buying and selling. Most places don't charge fees for those. But there are front-end fees, or there are back-end fees, or there are maintenance fees. It doesn't matter how you get hit there. Almost every mutual fund charges a fee. And so in this sense, that's where Acorns is kind of handling that for you. They're doing your maintenance fee. at, $1 a month or whatever the level is that you pick for their account. We have the basic level of Acorns. I don't have my retirement account is not with them, just using them for savings. So hopefully, Tawana, I agree. She says her bank's paying 10 cents. Exactly. You're like, yay, we're earning interest. We're earning nothing. And so I would say, what you need to have in your local bank is enough to pay your monthly bills and a little bit extra, but not a lot extra. I would actually say most of your extra would be great in some of these accounts because, again, even in the volatile parts of the market, it's still holding pretty steady. And hopefully getting to see our little graph there, not looking bad, even when things have gone way up and way down, still kind of steadily gaining and doing well. That was a great question, maybe a longer answer than you wanted, but a great question. And Patsy chimed in and said that she had 2 long-standing credit cards and the store canceled them. One was 30-something years old, and your credit did come down. So yes, exactly. So if I'm going to get, in terms of credit cards and how I was mentioning, like they're actually good for building our credit score. So if any of you have a really old credit card, you don't actually want to cancel it. You do have to semi-regularly use it. Doesn't need to be monthly. So if I have a credit card and I barely use it, maybe I use it once every 3 months, once every 6 months, that's enough to keep a credit card open. A lot of them won't cancel it even if you don't use it for a year. It'll still be there. It's still an active account, so you could even space that out if you wanted. But you do need to use them semi-regularly or else the account could be canceled. And I don't want that super old account to be canceled because one of the biggest parts of your credit score is the length of your credit history. And here's a tricky one. If you move and you get a new mortgage or you refinance and you get a new mortgage, all you're doing is nixing those old loans. They don't exist anymore. They are not part of your credit history. So for example, we refinanced, last month, 2 months ago, I don't even remember now. And in that, the mortgage that we had for the last 8 years gets closed. And so when they're looking at the average history of your credit, we just lost an 8-year history of a loan. There's no way around that. You're refinancing. The other mortgage is not going to be like, sure, keep $10 on the account. No, it's got to be all the way closed. But every time we close an account, it does affect our credit score. So if that credit card gets closed because you stopped using it, you need to be mindful of that. Now, when I'm saying cut up the credit cards, don't use them, it is totally okay to do that. 1.5 years, probably even 2 years, that credit card's not going to get canceled. You're still paying it off. That still counts as activity. So it's really when that credit card is at a zero balance for years that they're going to come back and cancel it. I think for us, our oldest card, zero balance, we didn't use it. They finally canceled it like year 9. We'd had it for a long time. So I wouldn't panic for those of you who are going to go the cut it up or lock it in a box method. That card's going to still be on your account for quite a while you pay it off. And much longer after that too. So, but it is good advice to make sure that you do not let those old accounts close unless you really, really want them to. And no, it's not necessarily the longest account. It's the average of your credit history. So it's looking at all of that. But if you had an account, let's say you had an account that was a 20-year-old credit card or loan, and then we have a few others that are much more recent, all of that is going to average out and actually be a lower credit history. But still closing that old account is going to only make your average all of a sudden be much, much smaller. So it is best to hold on to what you can, definitely if there are no fees. So in terms of, going there, one last thing on credit cards before we move on to credit scores, because that's where a lot of you are going in. Sorry, Janice, let me go there first. Janice is saying, how much would you put into this account monthly? And in terms of having an Acorn account or having some sort of separate savings account that is going to earn, hopefully, some good interest in the stock market or in safe mutual funds, which I feel is where Acorns is sitting right now, I would say it's what you feel comfortable with. I would keep some savings back personally in your local account that's earning nothing, because in terms of risk, that has none whatsoever. It's not earning or losing. It's just sitting there doing nothing, like cobwebs growing on your money, but it's safe. We locked it under the house, basically. It's okay to keep some back in your local checking account. But what I would do is mentally, you decide, you know what, when our checking account gets over a certain amount, everything over that amount, we're just gonna put into a separate savings account, into a money market, into Acorns. You decide what your risk looks like. Money markets right now are kind of pitiful too, and there's really no risk behind a money market. If you are 100%, I would hate to have this account go down a tiny bit if the market if we had, like a last March and the market went way, way down, and you would need that money next month. You don't want it in that Acorns account. Do you understand? So I want to put what I feel safe being there, and realize that long term, the stock market goes up. Long term, we don't go back down and stay down. It goes back up. Even from last March, we're way above where we were when it crashed last March. So you have to maybe close your eyes to it. That's my husband's response. I tend to look and see how things have performed on at least a weekly basis. He doesn't even want me to tell him. He doesn't want to know. Risk is not his happy thing. I'm over here playing in Acorns. Doesn't want to know. And so you kind of decide where you sit there. But I would say you set that set amount of what you are comfortable with having in your local bank. And then every month, anything above that, you just go ahead and send straight on. And if you know what that amount is, once you kind of get into a steady rhythm, then you just set it up as a direct deposit, if that makes you happy too. Okay, so last thing on credit cards here is the annual fee. I do want to hit on that. So as you're pondering a credit card, what credit card should you have? The first one is always, where are you going to use the points? What credit card is going to give you the most perks for what you will use? I know my in-laws use their Bean card, their LL Bean card for everything. Great. If that's what you love, get a Bean card. I know it depends on where you are and what you want. For me, I would like to travel. If we could go somewhere every month, I would love it. So that tends to be the focus of our credit cards. You'll figure out where you want yours to be in terms of the perks. Then it's looking at the annual fee. We've got a lot of perk credit cards right now that do have annual fees. So there are some that are great that don't. The Chase Freedom card is one of the top ranked cards with no annual fee. So go hunting in that one. If you're willing to get a card with an annual fee, that annual fee better have some pretty sweet perks behind it that you're going to use. So if a airline card, for example, gives you a perk of a free companion pass, but you don't ever fly or take a companion with you, that is not a very helpful perk, and you are not getting any advantage out of the annual fee. An example for us, I mentioned that we have a Marriott card. Marriott does have an annual fee on their card, but that annual fee gives us 2 free nights in any hotel that's a certain level or below. I don't think I could go stay in a Ritz-Carlton, but 2 free nights. The annual fee is $89 a year. Now, it's a high annual fee to go from a no annual fee to an $89 annual fee. But if we're going to use that, and we usually do, and we usually entice grandma to come and watch the kids, and that is totally like a weekend away for us, for $89, you just got 2 Marriott hotel rooms. That's a pretty good deal. So as long as we make sure that we are using those free nights, I am A-okay with that annual fee. It's like we're just prepaying for a date weekend. And maybe we need to treat grandma to one here every now and then, but seriously, that one we are fully able to use. So you do need to look at what those perks are behind the annual fee and make sure it is something that you are going to fully use, or else you're just paying a fee for the fun of it. And you're hopefully not paying anything else in terms of interest, but we don't need to pay those. So no annual fees if you could. And Wendy says she had her only credit card paid off for a year and they just canceled it. And yes, it will hurt your credit score as soon as it gets canceled, but your credit score will go back up. So I want to say when we refinanced, so I guess maybe I should go here first. I use Credit Karma to track our credit score. And Credit Karma, what they give you isn't your actual credit score, but Credit Karma is giving you kind of their version of your credit score, just to kind of keep it simple and keep it honest with you. It's not your actual number. It's kind of like an average across various things. But Credit Karma is free, and you can look at it at any point. So I'm going to stick a link in for Credit Karma too. It's really a link to a post that I did on Credit Karma, so you can understand a little bit more on it. But with that, I will log in. They'll send you emails first off if your credit score goes down. They'll send you emails if your credit score goes up, and usually those will trigger me to log in and see what happened. So when we refinanced, within you sign all the paperwork, but the loans don't actually close or change for a few weeks. So once those closed and the new one opened, I got the email that something big had happened on our credit report. I logged in, and our score had gone down actually about 70 points from the closing of the mortgage to the opening of the refinance. There's a few things behind that. What is changing your credit score? So one, an account was closed that did have like an 8-year history. Two, the other big part of our credit score is the amount of debt to the available credit that you have. So in other words, if I have a credit card that has given me like a $15,000 limit and I keep $150 on it every month, my amount of debt to available credit is a sweet ratio. So that's a good thing. Your credit cards, if they keep upping and upping and upping the amount that you can technically get in debt with them, it's not so horrible. You don't even need to think about that number. You just use it for what you normally use it for, and you pay it off every month. Then you're basically at a very, very tiny debt to available credit balance. Now, us refinancing, we're now at 100% debt ratio on that refinance versus the mortgage that we had been paying off and paying extra on for the last 8 years. Your credit report does not take into account that your new refinance is less than your last. None of that is factored in. It's looking at that ratio. So yes, that becomes 2 dings really until you start to pay on that new refinance, a new mortgage, and then things kind of get readjusted. So for us, that was 2 months ago. And things have already come back up, and it's not really that bad. Now, I don't need my credit report or credit score to be magical. I have no need to use it now that I've refinanced. It's just going to sit there and get hopefully better and better and better. But just so you see, it's that debt to credit ratio, or debt to available credit ratio, and the life of your loans. Those are 2 big impact on your credit score. Others are obviously late payments, anything that's been filed against you. Those are pretty big dings. Those are the ultimate things that they're factoring into that score. Your age actually factors into it as well. So it's going to be near impossible for your 18-year-old son to have an 820. Not only does he have no credit, but the life of his credit is like 6 months. It's just not going to happen. So all of that gets factored in together to form your score. So Stacy, how can you see your real score? Great question. With your real score, the best place to do that, you can actually log into each of the 3 credit reporting agencies, and each of them will give you your score. I think it's 3 times a year is what they'll give you access to. So Experian, TransUnion, and the third one has skipped my brain. Experian and TransUnion, that's enough, just knowing what your score is on both of those. It does not hurt to have accounts with these directly, because you can see exactly what's on your account. Credit Karma is going to show you that too, but I can see, and Equifax. Thank you. I should have known that. So between those 3, just be ready to give a sample of blood if you have lost your login or need to get into those accounts at some point. It always is a huge aggravating point for us if we can't get in, but if that's where you want to go, you can. So you have to get it from each of those companies. Keep in mind, if I'm trying to get a loan, they're going to pull all 3 reports, and what they usually do is look at either the average or whichever one got you the highest number, and they're completely cool with that. So they're not all going to be the same number. They all use slightly different math to figure out their credit score. That's why they all exist. If they were all the same, we wouldn't need 3 of them. But that's how you can do it. Logging directly into them, no charge whatsoever, as long as you stay within that limit, which I think is 3 times a year. And they will also send you emails when things happen to your credit as well. So Experian is one that I get. I'll get a Credit Karma email, and almost the same day I'll get an Experian email if something large changes on our credit report. Now, one of those things that can change, and we actually were having a conversation when we refinanced with the lawyer that was helping us refinance, And he was telling us about one of his clients that has spent like years trying to achieve a perfect credit score. So obviously he has to keep using the credit cards so that he can keep the credit open. But what happens is it totally depends on the time of the month as to when the payment has hit versus when they re-pull your number. And so if they look at that, yep, you have new debt, then your credit score goes down a couple points. It goes up a couple. So it's always changing. Don't fret over, it went down a couple points. It's going to happen. So for us, we had to get a new refrigerator because it just died. Well, we put that on a credit card. That automatically looks like, whoa, you just spent a lot of money that you don't normally spend, and your credit score comes down a few points. But as soon as you pay that off, it goes back up. So don't get in the habit of trying to look at that every single day. It's going to stress you out, if anything. You just need to keep an eye on it. I need to keep an eye on it so that I know that things are looking good, but it also helps you to make sure that your identity is safe. People are not opening accounts in your name. We've got an idea of what's going on. That's another reason to keep checking in. So again, Experian, Equifax, and TransUnion are those three. So Wendy, any tips to increase your credit score? So the best thing that you can do, honestly, Wendy, is no getting extra people to ding your credit. So don't try to open any new credit cards right now. Don't do anything that is going to pull a credit report. That even includes like life insurance. Don't go and get new life insurance right now. When you do decide to refinance or you're going to open a new loan, once we have one or two dings against it on a pull, it kind of stops counting them for a little tiny bit. It realizes that you are looking for a loan. So don't be hesitant on, we can only get one, pre-approval or one loan opportunity. It's still okay to completely shop a loan, but those first two are going to ding your credit just a little bit the minute that they check your credit report. There's nothing you can do there. But they will give you a little window where you can get some extras, and it's not extra dings. But no other digging into your credit or looking into it right now, like everybody else gets shut off, not giving anybody access. Even job folks, when you're hunting for a job, will potentially ask you to sign for them to look at your credit report, which is a little personal, but what they're trying to see is how much risk that you are. If you've got a really bad credit report, that's potentially not somebody that they want to hire. So just be careful on any of those forms. Don't sign them unless it is for the actual loan. The other thing that you can do, and this is a little strange, and it depends as well, you want to go with a credit card company that you have been using, but some folks have tried this. It doesn't count as a ding on their credit unless they say they're going to pull your credit. If they do, then say, no, I'm not interested. But you could call your credit card companies and actually ask them to increase your limit. Crazy, I know. As long as they do not pull your credit to do that, they just go based off of your past payment history or the fact that you don't currently have a large balance with them, most will say yes. And now you have magically made your debt to available credit look much better because your card has a higher balance. You're not using it, but your card has a higher balance. So that is one kind of like hidden backdoor way. You just need to make sure they won't pull your credit to verify that you can have that increase in credit. Beyond that, it's just paying off your cards, getting as much of your debt dealt with before the refinance as you can so that it looks, again, that your debt to credit ratio is even better. Okay. Trying to make sure I don't miss anything. I think we're all good on everybody's questions there. So let's talk refinance for a second. I see my husband already put in the link for the refinance calculator, and we did write a post on refinancing 101. Is it something that you should do or is it something that you shouldn't do? So as Wendy's asking specifically for their refinance, rates have started to go back up, but there is potentially for a lot of you still a good opportunity to refinance depending on the rate that you currently have. And so if you're in that boat, you can't decide where you want to go, you need to use a refinance calculator. I just stuck one, my husband just stuck one in the comments. It's my favorite one. It's a smartasset.com refinance calculator. And the reason for that, it's going to ask you what your current mortgage is, your current rate, how much you have left. It's going to ask you what your new rate looks like it would be and your new mortgage, and then tell you how long until you pay off the refinance, because refinances have a cost. I've got to pay the lawyer. I've got to pay the closing costs. all of that behind it. If you're going from a significant drop, though, in insurance, that doesn't take very long. For us in our refinance, we will have paid it off in 3 months. That's kind of tiny. So means totally should refinance. If you're looking at not paying off the cost of that refinance, though, for 3 to 4 years, well, if you're planning on moving in 3 years, then that's pointless. Do not refinance. So use that calculator to get an idea of, is this something we should do? Is this something we shouldn't do? I will also mention, I don't know if he's already stuck the link in for this one or not, but in the post that we did on should you refinance, when we refinanced, the guy that we refinanced through said, I started telling him what we did and the fact that we ran a blog, and he was saying, you know what, I have a great offer, and he offered it to us. We got the offer, but he offered it to everyone else as well. So I would encourage you to look at that offer. It's in the refinance post. I think I also have a direct link that we'll stick in the comments to the page on it, but it says they pay all of the mortgage lender fees for you. So there's no appraisal fee, there's no credit report fee, all of that they handle, and all of the lender closing costs. Now, it doesn't cover the lawyer closing costs and whatnot, but all of theirs are dealt with. So for us, our total closing costs were I think $1,600 on the loan. That includes your taxes, it includes the lawyer, it includes your title search. So obviously you're still going to owe closing costs, but they're going to be significantly less than what a lot of folks are charging. So it's at least one to get a quote from. As we talk about getting a few different quotes and deciding who's got the best rate for you, I wouldn't, it's there. He's giving the offer. We get nothing, by the way. This is just me getting to share it, and he gets more folks through his office too. Okay, so with refinances, rates are still fairly low. I'm trying to see right now, the current rate on a 30-year fixed is 3.3%. That has gone up over where it was in February, mid-February, but that's still pretty low. So depending on what your old mortgage was, this could still be a considerable savings for you. So 3.3 on a 30-year fixed. It looks like a 2.55 on a 15-year fixed. My favorite website, by the way, guys, to check this is bankrate.com. They will gladly help you get a mortgage as well. I don't usually do that with them. I don't think we've ever done a mortgage through Bankrate, but it is a great way to find out what the current rates are for anything, actually. So I'm on the mortgage refinance, but you can actually go through off of their homepage and find out what current rates are on credit cards, on savings accounts. It kind of goes through all the options. You just tell them what kind of account you're looking for, and they show you all of the current offers. So it's a super easy website to get an idea of what your options are, no matter what kind of account you're looking for. And then again, that website was bankrate.com. So hopefully that will help you if you're looking for a specific account. And Brooke, I completely agree. Brooke says that if you lock all of your credit with the 3 credit companies, or freeze is what most of them will say, that it's incredibly cheap identity protection. It is. You don't need to pay a thing. You put a freeze on your credit, 0 accounts can be opened in your name without literally what feels like giving blood. My husband has long had a freeze on his because someone did steal his identity, opened like 15 different credit cards in his name. This was probably about 4 or 5 years ago now, and we froze his credit. So even to refinance, they're going to ask you all of these crazy questions that you're thinking, I don't know the answer to that. What was your credit balance 4 months ago? Like, who knows that information? So sometimes it's really hard to get the right answers, but that is how you unfreeze it. And no random person is going to know those answers because you don't know those answers. You will be able to unfreeze it, but it's just going to take a little bit of time and a little bit of patience on the phone unless you have learned all the magical questions they're going to ask. But really, for someone who doesn't have the need to open any accounts anytime, it's perfectly fine to leave them frozen. It's not going to bother you at all. Your life will go on, and you will long forget that they have a freeze on them until you try to do something and someone will say, I can't, your account's locked and it won't let me do anything. But it's a great way to lock things down and keep your identity very safe. So to keep going here, we've talked credit cards a little bit. Credit scores, kind of the key parts of bringing your score back up, maybe helping your score a little bit. In terms of loans, we've talked refinances, but I do want to hit on a few others. A lot of folks love to take out home equity lines. Guys, it's really, if your goal is to pay off your mortgage and then you're going to take a home equity line out to do a project around the house to, maybe it's something big, maybe it's something that is going to significantly raise the value of your house, that might be something to consider. But if that home equity line is so that you can go on a trip, if it's so that you can pay off debt, if it has nothing to do with your house whatsoever, it shouldn't happen. Because again, that is secured debt linked to your house. So please, think through how you're going to use that. I think a lot of folks like to think, man, we've got cash and we should be taking advantage of this cash. I mean, I might say get a home equity line if you are 94 and you want to travel around the world and you don't care if you don't pay off the loan. But I don't think that fits for most of us. So really and truly, that home equity line, it is a good access if I want to put more equity in my home. I want to make my home more valuable than it was when I took out that line of credit. For most of us, that's not really the route that we want to go. So in terms of loans, a mortgage is really the only loan that I would encourage anyone to have. There's no need to have anything beyond that unless you're going to open a new business and you have a brilliant idea. That's a whole nother game to play there. But a mortgage is the only debt that I would say is okay to hold. I know I can't say that we're debt free. We have a mortgage, but we have zero credit card debt. We have zero school loans, none of that. So if you can get by with zero loans other than a mortgage, you're doing pretty sweet. And in terms of, even school loans, there are lots of ways to cut down on college costs. That is, definitely not one to go to when we have 10 minutes left. But, we don't even have to go there either. There are tons of folks that have worked their way through college. It's not the easy way. It is not the I'm out in 4 years way all the time, but it doesn't have debt. And that should be our focus. So when you're thinking of other loans to grab, just be really, really hesitant to jump in on them. Ponder, if I didn't get this money and I didn't pay all this interest for all those years, what can we do instead with, the savings that we wouldn't have spent on all that interest? How much could we have gotten into our retirement accounts or into investments somewhere else? That's not debt. That's money that's growing. That's money that's getting stronger for you. That needs to be your focus. So just to kind of go there as a whole. Now, if you have a specific question on a loan, I'll be glad to try to answer, but that is, kind of just to have the right focus as you're pondering debt. So Lynn, is the housing market still strong? It is. We've got a few friends that are all realtors, and it is still a put down an offer and 14 people put down offers with you. So we are seeing mortgage rates go back up, but they've also they went up in March and then they kind of have plateaued. So we'll have to see what happens. The Fed has said that they're not going to make any changes. So in theory, the mortgage rates should kind of stay where they are. Some of it's based on fear and other things that people are doing that drive rates. But for right now, I think things are going to hold pretty steady. And we will see the housing market stay probably pretty strong for the next year or longer. It would be what realtors would love, but things are super strong right now in most places. Okay. So Jill, this is a great question. She says, we don't have a mortgage payment and I've seen this used as a negative on credit denials. So how can I fix this? So Jill, not having a mortgage payment, it looks as a negative for two reasons. One, it's really that debt to credit ratio and the amount of available credit to you. While your mortgage counts as the debt against it, the fact that somebody was willing to give you a loan that was that much money for a mortgage is actually helping your credit card or your credit score. So for you, it may be that you do actually go to the credit card companies and see if you can increase the credit on the cards that you have, kind of any games that you can play to increase your available credit without actually increasing your debt. That's going to be your easiest one. Not having a mortgage, long term, it could impact you in a small way, but if you aren't needing your credit score to, if I'm not needing a loan, then the number that I have on my credit score really is meaningless to me. It can give you better life insurance. It can give you a better car insurance rate. That's about it outside of a better loan. So I wouldn't spend too much time being really concerned about it. If you have a couple credit cards that you're not using, other than paying them off every month, then you have that access to you for credit if you needed it. But you don't need to worry about, having access to more credit unless you're wanting to move. If you're wanting to get a different house, you're wanting to get a new mortgage, that could be an issue. But most mortgage companies should be pretty smart to then look back and say, oh, wait a second. We're going to give them a mortgage, yes, but they have all this equity in this house that they're about to sell. And that is only going to, impact this new house even more. Your total value of the house versus the amount of the loan is going to look great. It's a less risky loan for them, and they'll start to see that big picture. So it's really only a concern if you're needing a new loan or a new mortgage, but hopefully you're going to be with a lender who's going to look at the whole picture versus just looking at a credit score. And if that is what the lender is doing, then you don't really want to be with that lender anyway. You want to look at someone who's going to look at all your numbers and hopefully be a little smart about that in the end in realizing it. Okay. Any suggestions for a new college grad? Eleni, I love this question. So the best thing that they can do is to get a credit card. It might be crazy to get a credit card. If they want to get a credit card and keep the balance low, not let the credit card company give them this huge available credit, that's okay. Just having the account is the best thing they can have right now. And you will find that there are some companies that will report to the credit card bureaus as well. There are some ways to also increase your credit score directly through Experian, TransUnion, and Equifax. And so the way to do this, you're going to log into those accounts. I know Experian does this. I'm pretty sure at least 2 of the 3. So log into each account, and what they will do is allow you to hook in your utilities. They'll allow you to hook in your cell phone bill into their account. So these are not bills that usually show up on your credit card, usually show up on your credit score. But they will allow you to do this through their system, kind of directly linking those bills into their system, so that now when I pay my phone bill, when I pay my utilities, depending on the city you're in, not all cities are available, but a number are, those are all counting as payments made on time, payments made in full, and they are all adding to your credit score. So I know Experian calls this their credit boost program, and that is a great program for new grads, for 18-year-olds who are going to go out and get their own apartment, whatever. It is a great way to build your credit, or for folks who have horrible credit and we need to rebuild our credit. These are all counting. They're counting as payments made. Now, they're not counting across all 3 bureaus. They're counting towards that bureau. But remember when I said a lot of lenders are going to pull all 3 numbers and most of them are going to use the highest number? Great. You've been working through whatever ones would let you to build that number as best you can, and that is a great, great program. So a basic starter credit card for them that doesn't have a super high balance available that they can pay off every month is the number 1. And number 2, definitely getting started into those, I know Experian's Credit Boost. I don't know what the other ones call their system, but they do offer it, linking in those bills that they pay. And it's basically showing them that you are steady with your money. You're making your payments. You're not getting behind on the basics of life. And then it's helping build that number all the way up. And Brooke is saying that she's pretty sure you can do it with all 3. I know I played with it on the Experian side. It's not something that I need them to track. We have plenty of history and open accounts, but kind of played with it to see what Experian would allow. So good, thanks for chiming in, Brooke, that all 3 of them do allow you to do that. And Pat said with the cross-country folks I gave the link to that they were not interested in a refi that was under $100,000, I'm guessing was your issue. I'm sorry to hear that. Ours was a little over that, but not too much over. But I'm sorry that they gave you a hard time and that they didn't get you an answer very quickly. But hopefully for other folks, if you do end up going through them or finding some information, it would be helpful for them. I don't know. Josie's asking, have I ever heard of a tax deed sale auction? Yes, most counties have them on a regular basis for the folks that do not pay their property taxes. So you can pay all your mortgage payments on time, but if you do not pay your property taxes, your house is going to be gone very quickly. The county is going to take it and sell it for you so that they can get their taxes back. So, if you're ever at risk of not making those payments, hopefully you're escrowing those payments if that is a concern for you. We do not escrow our tax payments, but we do save them every month so that we are good to make them come December in our area. And Lynn, we can definitely do a Q&A on planning for college. I have 2 10th graders right now, and so we are what feels like in the throes of it, even though we're technically 2 years away from them leaving. But the best way that you can plan for college is really to start planning for college in like 8th grade. And I know that seems crazy, but it's mapping out where your kids are going to go. If your kids are in public school, I was a public school kid, I would still encourage you to learn as much as you can about what is out there, what is available for your kids. Because in public school setting, I don't think a lot's changed since I graduated from high school. You're talking about a school with 400 high school seniors and 3 guidance counselors that are devoted to those seniors. 3 people cannot look out for the best interest of 400 people. So this is homeschool or public school. We homeschool, but having just your ears out for everything and trying to know what's available for your kids is the best way, and definitely starting early. But Lynn, we might even make it next week. We'll just talk about all the ways to kind of get prepped for college, pay off college loans for anyone that's already gone through it. But I would encourage all parents, do not think that the public school is going to just make sure that they are right where they should be, or that they're taking advantage of everything that's there, because that poor guidance counselor can't. It's impossible. I had a great guidance counselor. I don't even remember her name, but she was really sweet. But she can't possibly be focused in on every single kid and making sure that every single kid isn't missing out on what's available to them. So that is probably the biggest tip I can give you. And perfect. So Melissa, you have a kid in 7th grade. You're like right there on my getting ready at 8th grade and having a plan. But we can do that next Monday. That can be our topic. It would be a fun topic because I'm living it. Just go straight from what we're doing. And Danny says they're now taxing in her area twice a year. That's probably brilliant for the number of folks that have paid off their mortgages. They are no longer escrowing. The county now doesn't have to give you this one massive bill that scares you. To break that up gives them probably a better chance of getting their money versus once a year, and folks can't afford it. So very smart in your area to go to twice a year. Okay, so hopefully I've gotten to all of your questions tonight. In terms of credit cards and credit scores, they're not evil. They're incredibly helpful. I did have someone ask the last time we did this, is there a certain number of credit cards that you should have to help your credit score? Every credit bureau will tell you a different amount of accounts that they're looking for, but generally one account is not what they're looking for. So as I mentioned, that we do have an Amazon account, and we do have our other account that we use for personal use. We use the Amazon for Amazon. We use the other one for all of our personal. Those all count in, and they are different accounts. They're showing regular payments on those different accounts. They're also showing a larger credit available. So if you're thinking about opening a bunch of cards, that's scary. That will affect your credit score. So don't go there. But at the same time, talking about the 18-year-old trying to build credit, it is going to take a little bit more than that one account to help them build credit, but it won't take a ton. So the longer that they have accounts or that they are making purchases, that's still helping them, but it's not necessarily that one account that's going to be magical to give them an amazing score either. Just so, kind of keeping it real on that one. Okay. Well, we'll go ahead and call it here. We hit everything that was on my list, and we're right on time. And I'm glad that you guys like that topic. So next Monday night, we will hit everything about college planning and college savings and college loans that I can think of, and everything that we've learned to try to help you guys too. So if you've got anyone else that has kids in high school or late middle school, have them join us. I don't know, kindergarten. You can start super early if you want. But it's a huge help. The more time you think about it ahead of time, the more classes they've done early, the more scholarships they've already earned. There's a lot there. So we'll go there next Monday night. For those of you who your kids have grown, maybe you can chime in on what they did, and you can help us out too. So don't feel like it doesn't apply to you. It's a great chance for you to share maybe what worked or what didn't work for your kids. So I will talk to you guys again next Monday night. I'll also be on tomorrow at 2 o'clock to go through all of the drugstore deals. It's a whole new month. I actually just spent 3 hours typing up a bunch of pictures from both stores. So if you head over to the Walgreens list or the CVS list on Southern Savers, you will see a lot of extra deals that were not there this morning. They're there now, and I'm ready for you. So tomorrow at 2, we'll go through all of those deals too that are running in the drugstores this month and this week. So thanks for joining me tonight, guys. I hope you have a great rest of your week. If I don't see you again, or I will get to chat